guys, it's Stock Curry, and I hope you had a great Christmas. Americans don't celebrate Boxing Day, so it's time to get back to making some money. Now in today's video, I've got all the news you need to know before the markets open on Monday, so let's get into it! First up in the news, the Omicron variant continues to increase. We are seeing more cases than we've seen at any other time in US history, and it's starting to disrupt some portions of the economy. That said, it is pretty clear that this variant is really mild. It has very similar symptoms to a cold or a mild flu, so we're not seeing the huge hospitalizations like we have seen in the past. Despite that, there are some localized governments, such as New York State, that are completely shutting down, so we could see this impact the economy a little bit, but for the time being, the markets don't really seem to care. They seem to understand that this is a really mild variant, and the markets are really brushing off the Omicron variant. It is still something that we need to watch in case we do end up with a lot more lockdowns than we're currently getting. Now, inflation continues to rise. We are seeing used car prices rising faster than ever, and I also saw a report earlier that the lumber prices are rising as well. So inflation continues to go up. We could very easily see the highest inflation numbers we have seen since the 1980s come the first week of January when we get the December numbers out. Keep in mind that this week we don't have a whole lot of real big economic news. We get a little bit of jobs report news, a little bit of real estate news, but by and far it's weekly news. It's not going to be real big. It's next week that we will get the monthly December numbers, and next week is the one we're going to get major economic news that could really move the markets. But for this week, there's not a whole lot of news coming out. Now, despite the supply issues and inflation and Omicron and all this stuff, holiday sales still rose 8.5%. So I do think this is going to help boost markets on Monday. And speaking of boosting markets, it does look like the Santa Claus rally is on its way. This week is the week that we would officially get the Santa Claus rally. Now, just to let you know, Monday through Thursday should be green days, but Friday historically is a red day. It's the last day of trading in the markets. It's December 31st. And so what happens on Friday is we normally get a red day because that's the day that we get our tax loss harvesting. Tax loss harvesting, if you don't know what that is, it's basically if you have any profits that you've gained throughout the year, you take whatever stocks you're down on and you sell those so that you turn those down stocks from a paper loss into a realized loss, and that in turn lowers your net profit for the year, which also lowers the amount of taxes that you have to pay. And it can be huge because especially in short-term taxes, some people are paying upwards of 40% on their gains. So as much of the tax loss harvesting, as much losses as people can convert from paper losses to realized losses by selling stocks, they're going to do that in order to reduce their taxes. And usually the bulk of that happens on the very last day of the year, once people know how much they actually have to sell in order to reduce their tax rate by as much as possible. So Friday is probably going to be red day, but Monday and Thursday historically are green days in the market. And the final thing I want to say is, even though I do see the markets going green this week, and I do think that we are going to have a big green month in January, and possibly, especially in the first 2 weeks of February, after that, it looks really bearish. Wall Street is expecting that the S&P is going to have significantly lower gains, if they have gains at all. Some people are saying that we're going to enter a bear market. Some people are going to say we're going to have a full-on depression. Some people are going to say we're going to have very small gains of 2% or less. But whatever happens, it is not going to be the bullishness that we saw in 2020 and 2021. This is going to be a completely different market that is going to be a lot closer to 2000 or 2008. So just keep that in mind. When the interest rates go up, and they will go up by a lot, we'll talk about that a little bit later, we should see the market go down. So that's my prediction. Don't confuse short-term bullishness with long-term bearishness. There's a big difference between being short-term bullish and wanting to go out and buy stocks for short-term trades and being long-term bearish and expecting stocks to go down throughout 2022. So again, we can make short-term trades and make money in the short term while still being bearish in the long term and waiting for dips to buy long-term holds. All right, let's get into the stock picks and the news on the individual stocks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stocks for you. Every day I spend hours and hours and hours watching all kinds of videos from the top finance channels, and then I consolidate all of their stock picks and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about it, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into our stock and crypto picks, I do want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use for all of my videos. All right, let's get into today's stock and crypto picks. And first up is CRO. This is Crypto.com. Keen and Grace let us know that the CEO of Crypto.com just accused CoinMarketCap of arbitrarily reducing exchange ratings. We've already seen weird things happening with the market cap on tokens such as Shiba Inu, as you can see here. Now the CEO of Crypto.com is accusing CoinMarketCap of misreporting Crypto.com's exchange volume and arbitrarily reducing the exchange all the way down to the 15th place. In reality, though, Crypto.com is second in exchange volume right behind Binance, which is number 1 on this list. So people think Binance lowered Crypto.com's ranking on purpose. One theory is that CoinMarketCap did this because Binance was fearful of the competition from Crypto.com. Now, we don't know what is really going on. Your guess is as good as mine. The one thing we do know is that Crypto.com is the best exchange for US residents because they have the most altcoins of any exchange in the US. And that is why they are the number 2 exchange in the world. By the way, if you want to stake your crypto on Crypto.com, they offer up to a 20% interest rate on staked crypto. That is the highest interest rate of any exchange that I know of. If you want to check them out and also get $25 worth of free CRO, you can do so using my link. You can find my link for Crypto.com on my platforms page at stockcurry.vip/platforms. And next up is SAITAMA. This is Saitama token. Keen and Grace let us know that the CertiK audit was completed on Saitama, and the audit is now showing up on CoinMarketCap. The audit showed that 83% of the issues CertiK found were resolved by the Saitama developers, but 17% of the security issues remain. Keen and Grace also let us know about another red flag with Saitama, and that is the fact that they did not request their exchange app to get certified by CertiK until November 22nd, a full 9 days after they were supposed to launch their app. So something is strange there. That said, the app is available in the Apple App Store, but Keen and Grace has not tested it yet for functionality. The Apple App Store app is still in testing. Also, it is not yet available on Android Play Store. Now, there is an app called SaitaMask on the Android Play Store, but it is fake, so please don't download it. Okay, now we're going to get into our stock picks, but before we do, I want to do some technical analysis on the stock market. And for this, I'm going to be using SPY. This is an S&P 500 ETF. I wanted to point out that SPY is technically on the verge of a breakout. Even though SPY has been in consolidation for the past few months, the technical setup we're seeing now is very bullish. We have a golden cross on the MACD, and we also have very strong resistance at $470, which I have here as the orange line. As you can see on the chart, SPY basically hit the $470 level 11 times over the past 2 months without being able to close above it. But this time around, SPY just hit a double bottom, or a W, which is a bullish technical pattern. Now, if this pattern plays out, We should see SPY close well above the $470 level this week and then fall back down to the $470 level next week and then go on a new bull run once it does. Now, overall, January is shaping up to be a bullish month for the stock market. Now on to the individual stock news, and first up is AMC. This is AMC Movie Theaters. Analysts are giving preliminary estimates on AMC's Q4 numbers, and they are ranging from $1.12 billion to $1.22 billion. In the same quarter last year, AMC only posted sales of $162 million. So analysts are expecting AMC to post a year-over-year revenue growth of over 600%. That could cause a significant bump in the price of AMC shares. Just keep in mind that AMC is not expected to report earnings until March 9th, so a lot can happen between now and then. Now, technically, AMC is still bullish, although it is losing a little bit of steam. This week will be crucial for AMC. If AMC can continue its bull run and get above the 50-day EMA, I think we have a really good chance of getting back into the 40s. Next up is BFRI. Zip Trader said BFRI is turning into a short squeeze candidate. The stock has more than tripled in price over the past 3 weeks. Utilization is at 99%, but the days to cover is only at 0.10. The reason is because BFRI just started trading 2 months ago. So while utilization is nearly maxed out, which means all of the available shares to short have already been borrowed, the trading volume is so high that all short sellers could cover in just 1 hour of trading. That does not fare well for a short squeeze because there's too much volume and it'll be too easy for shorts to cover. Now, the number of shares being borrowed is estimated at 2.34 million. And as we can see here, the free float is 3.6 million. So we can calculate the short interest as 2.34 divided by 3.6, or 65%. So the short interest is very high at 65%, and the utilization is at 99%. But the fact that the days to cover is only 0.10 means the short squeeze potential on BFRI isn't as high as it might appear if you just look at the short interest. Now, all of that said, the argument is that the borrow fees are so high, shorts are going to have to cover soon because they won't be able to keep shorting the stock. As you can see here on Fintel, the borrow fees are up to 180%, which means BFRI would have to drop in price by 15% per month just for short sellers to break even. Now, that is a valid argument. But as you can see on the orange line on this graph, the high borrow fees have not resulted in any covering yet, even as the share price has continued to soar. Now, regarding whether or not you should play this, I have no idea. This isn't as strong of a short squeeze potential as I've seen in the past, and in my experience, very few of the short squeeze potential stocks actually short squeeze. They usually just run up on retail hype and then die down just as fast. The only question is, how long will it take retail traders to lose focus and move on to the next hype stock? And can short sellers hold on long enough for that to happen? Most likely, you're going to see 1 or 2 more weeks of volatile hype before retail traders move on. So overall, I would say I don't think BFRI will short squeeze, although it may continue to run up, possibly up to $20 or higher just on retail buying alone. Just be careful because BFRI will most likely drop back down just as fast as it ran up. I think BFRI would work best as a day trade, as I would be uncomfortable holding BFRI overnight. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. ZipTrader let us know that NIO will be teaming up with BYD to help produce a cheap mass-market vehicle. The partnership would also help BYD break into the luxury car market that NIO currently dominates. So we'll have to see if this partnership affects the stock price in any significant way this week. Most likely, this news is a long-term catalyst for NIO. Technically, NIO remains bearish, although it might turn bullish later this week if we can get a few more green days. If NIO fails to do that, though, and it continues falling, the next support level is all the way down at $22. And the last stock we're going to talk about is TTCF. This is Tattooed Chef. They are a plant-based foods company. Jeremy with Financial Education talked about a video that another YouTuber did who reviewed Jeremy's TTCF stock pick. In a very similar way that I analyzed Jeremy's stock picks, this other YouTuber analyzed TTCF. By the way, the other YouTuber's channel is called Foolish Investor. First, Foolish Investor said that food and beverage companies trade with a PE ratio of between 20 and 30, and he thinks TTCF could get to a PE of 30 if they continued their fast growth. But he does think TTCF's revenue growth rate will slow since it's harder to grow the larger you become. Even in TTCF's official projections, they are seeing a slowdown in growth over time. So Foolish Investor extrapolated TTCF's numbers out 10 years through 2031 and came up with a revenue of $2.3 billion, or less than half of what Jeremy with Financial Education is predicting. Now, Foolish Investor did admit that both he and Jeremy are both making predictions and that neither one truly knows what TTCF's numbers are going to be 10 years from now. Jeremy with Financial Education rebutted that the market for plant-based foods would continue growth along with TTF's market share of that space, so that considering, Jeremy thinks his predictions are still good. Further, Jeremy thinks TTCF is going to buy out additional brands in order to grow, and that they're going to turn into a food conglomerate rather than a single brand. Now, both YouTubers agreed that TTCFs would grow very fast due to their vertical integration strategy. And because of that, Foolish Investor said Jeremy with Financial Education could make $10 million in TTCF over the next 10 years, but he said it comes with a really big risk. And that risk is that while TTCF's revenue will grow, their profits might not. And that is because TTCF will have to spend a lot of money marketing to gain customers. They will also have to overcome high inflation and rising interest rates. Further, Foolish Investor sees more and more competition coming in and taking market share away from TTCF. In response to all of that, Jeremy with Financial Education said he agrees with Foolish Investor that building a brand quickly will be key to TTCF's growth and success, and he also agrees that TTCF can 10x over the next 10 years. Jeremy did seem to downplay the risks of competition, inflation, and rising interest rates, though. I'm not sure if that's just because he is confident in Tattooed Chef's ability to overcome these hurdles, or if he just doesn't think inflation and higher interest rates are that big of a deal. I will tell you that Tom Nash said that interest rates will need to be over 20% in order to overcome the inflation rate that we're currently seeing. And I will also let you know that I do think inflation is an issue that is here to stay and will require very high interest rates in order to overcome. However, I do think those higher interest rates will affect both TTCF and their competitors equally. In the short term, those factors could weigh heavily on TTCF and cause the stock price to drop much further from current levels until the economy starts leveling out and high growth stocks are able to rebound once again. Technically, the chart is still bearish, with a MACD histogram dropping and the candles below all of the EMAs. TTCF is maintaining the strong support level at $16 for now, but if it breaks below that, we could see TTCF drop down to $10 by the end of 2022. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is for a short-term trade. Remember, Americans do not celebrate Boxing Day, so the markets are open on Monday. Don't forget that if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a U.S. resident, or if you're looking to trade OTC penny stocks, or if you just don't like payment for order flow, then I recommend Interactive Brokers. Interactive Brokers is the best trading platform worldwide. They have highly discounted trading. Trade started just $1 US, $1 CAD, €4 or $6 Australian, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. And they both have cryptocurrency trading as well. Now, I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos. Finally, I hope you have a lot of success trading. I want to remind you to hit that like button, subscribe, and if you are watching on YouTube, click the bell icon next to subscribe and click all. That way you will get all of my videos and you won't miss any. All right, I will see you guys tomorrow.